conducted an interview with Frank Gencarelli, Senior Vice President of Legal and General America, here at the JW Marriott in Scottsdale at the huge convention of the National Association of Independent Life Brokerage Agencies. Enjoy this interview. It's really a good one. Welcome, everyone. I'm Steve Savant, host of the Business Insurance Zone, and today we're broadcasting at the National Association of Independent Life Brokerage Agencies at the JW Marriott in Scottsdale, Arizona. And with me today, from Legal and General America, is my good friend Frank Gencarelli. Frank, welcome to our show.
Thank you so much, Steve. It's great to be here.
Well, we're with so many carriers here today, and we're talking with you. I want to talk about so many things that are going on to really let our agent force, our field force, really know what has been happening, because we're going through name changes here. I mean, Banner's been huge in the market.
Yeah.
They've owned the guaranteed term market. They've owned the guaranteed universal life market. You're one of only, a couple carriers that even endow off the guaranteed universal life.
That's right.
A lot to talk about.
Yeah.
And you guys do huge business in the preferred area too. I mean, you guys are major players.
Yeah.
Talk to me a little bit about the pricing, what your mindset is. And remember, there's a lot of carriers that are leaving the GUL market.
That's right.
Why are you staying in it?
Well, because we can. To answer the question very shortly and succinctly, we actually believe that people want guaranteed premium protection. We think that when people look for basic lifestyle protection, what they want is a guarantee. And we have been a leader in the guaranteed premium term marketplace, true term, not term UL, for over a decade, and we see no reason to abandon that product type. We have recently become a major player, as you know, in the guaranteed premium universal life market. And we did it with a twist. We essentially said that there was no reason that we couldn't offer a cash value with those guaranteed premium universal life products.
I just want to stop you there, because a lot of people are doing current assumption UL kind of cash values on subordinated guaranteed platforms, okay?
Yes.
But you're really not doing that. You're doing something a little different here, giving us cash values without saying, I'm kind of not bastardizing the product by doing part indemnification and part accumulation.
You know, there's strength in simplicity. And we have a very simple story. We sell guaranteed premium term. We sell guaranteed premium UL with guaranteed cash values. There may be a time when we will do that current assumption with a subordinated guarantee, but the time for current assumption isn't now when interest rates are so low.
Oh, for sure.
The time for current assumption would be if and when interest rates rise, and we'll respond.
I think about this. If I have preferred clients, I mean, a lot of these people, we're projected to see life expectancy to go quite large. I mean, into the 90s. We're looking at Willard Scott every day saying happy birthday to a handful of Americans that are turning 100. So this is everybody that's in the Gen X and Gen Y. A lot of the females that are in the preferred status are all going to see late 90s, early 100s. Now, why do I care? Because you're one of the few carriers in the United States, maybe even in the world, that actually give us the guaranteed platform on a universal life contract.
Correct.
And I have cash values.
Correct.
I might need that cash at 90,
Correct.
95, 100, and it doesn't look to me like I'm paying extra, because you're already winning the premium spreadsheet wars.
We are. We're top of the charts. With
No
both
doubt.
our term and our UL, we're top of the charts in any sort of premium spreadsheet war. You've touched on one of our soapbox issues, and that we actually believe that agents would be doing a disservice to clients if they did not show them lifetime guarantees. And in this day, that's guaranteed to age 121. The fact of the matter, Steve, is that a 55-year-old preferred, not preferred plus, but preferred male, has about a 20% chance of surviving past age 100. And we actually believe that agents ought to present the 121 option to each and every client with the caution that with medical advances and with extensions of life that we're seeing right now, you may well survive to 121, or certainly past 100.
We just saw a case with Banner where we were highlighting the difference between a guaranteed participating whole life contract and the GUL that we were offering through Banner. Now, I thought it was amazing, because the complaint of the purveyor of the whole life was that we had no guaranteed cash, we had no endowment. And I said, well, in my Banner contract, I actually have all this, and yours is performing on the basis of dividends, which is not guaranteed.
Not guaranteed.
And ours already priced into the product.
Right.
That little mantra could be the indemnification banner, if you don't mind me punning it, for 2012.
That's right. That's right. The fact that we have guarantees across the board, guaranteed premiums, guaranteed cash values, I think is just a source of comfort. The American public just has been trained through experience not to really trust insurance companies and other big financial institutions. So any sort of trust me factor is met with great skepticism.
I'm also noticing that in the platforms, there's about 4 to 5 carriers left that actually make a distinction between standard and standard plus.
Yes.
And you guys you kind of niched on the top side of that issue. The standard plus area seems to be the area you want to play in.
It really is. I mean, when we focus on pricing, we focus on standard plus and better most rigidly in terms of where we want to be in the spreadsheets and the like. We also rate off of standard plus. So if you get a table rating from us, it'll be off the standard plus rating. And that
not just the standard.
That alone can be
that could be a table.
That could be a table advantage versus the competition.
Well, I really like that because now I have 2 areas to go in with Banner. It's not just the pricing, because we already know on every spreadsheet, whether it's GUL or term, all those guarantees, we own that indemnification space.
Exactly.
Now we're trying to look at areas where we can niche out, and standard plus, especially if I had a rating.
Yes.
Now I'm pricing out on the standard plus chassis, not the standard, which is, again, could be almost a table, depending on age, gender, so forth. Well, I'm very interested because if you said at the beginning of our interview, so many people are leaving, you don't have to leave because you don't have to.
We don't have to.
And give a little idea for the normal agent who hears there's so many people deserting the market, and you're actually getting more embedded in it.
That's right. That's right. We have, and not to get too technical, but there are reserve issues that companies have to face, and we have, through the strength of our parent, really kind of great coverage for all those reserve issues, both on true term, guaranteed premium term, and guaranteed premium universal life. Therefore, we feel as though we can maintain this emphasis on guaranteed premiums and emphasis on top of the chart competitiveness. And the fact of the matter is we don't emphasize single premiums that much either. So in this investment environment where returns are so low, we're not faced with the challenge of having to invest a lot of single premium business that comes in. We are, as you say, we're the guaranteed indemnification company.
Right.
And because of that focus, we can continue to offer the guarantees where others are struggling.
Well, I like the reserve issue because everybody's been debating the issue of secondary guarantees, right? Especially when you look at shadow accounts, things of that nature. It's always a kind of a struggle to say, well, can I price to that? How much am I going to have to reserve? Is that going to be profitable?
Right.
But because of your parent now, and we're going to get into this in our second segment, really large, about the name change, but when I'm thinking about Legal General, I mean, they're huge.
They're huge.
And they have reserves. Those are all those reserves, all the strength of the parent company is backing the Banner and William Penn of New York, or it isn't?
It isn't, no, but they have been instrumental in a lot of the transactions that we've executed in order to back those reserves. So if you will, we can't say that the full faith and credit of Legal & General is behind the obligations of Legal & General America, and that's quite common for European parents. I mean, I can cite several other examples of well-known names.
Sure.
But they have been, in essence, co-signers on some of the transactions that we've done to cover those XXX reserves.
And of course, they're 100% stock owners.
Yes.
Yeah, so I would say they're not leaving anytime soon.
They're not leaving anytime soon.
Okay.
No, we're a big, important part of their international strategy.
Well, I'm thinking everybody has such a name recognition of Banner. It's been in the brokerage market for a long time.
Yes.
And William Penn of New York, I'm not a New York resident, but I'm sure that people have been in there. I'm just assuming, because that's kind of a small area of our practice at Brokerage Alliance. But I'm trying to think about Banner and the name change that we're heading to. Because when we get back from the break, I want to talk about the whole idea of not only the UK parent, but the new kind of rebranding, because we're still going to see it on Banner paper, right?
That's right. That's
okay,
right.
So
paper.
We won't really notice that much change.
Well, you'll notice it certainly in the way that we present ourselves. The policies will be issued with Legal & General America logos, but it'll be very clear that the underwriting company, if you will, is Banner Life or William Penn Life of New York.
Excellent. Well, listen, when we come back after the break, we're going to talk more with Frank Gencarelli on Legal & General America, the new name in America, with their parent company, Legal & General. Hello, welcome back, everyone. I'm Steve Savant, host of the Business Insurance Zone, and I'm interviewing Senior Vice President of Sales and Marketing for Legal General America. I got to get used to that, Frank Gencarelli.
All right.
Frank, welcome to the show. And I'm going to have to get used to this.
Yeah.
I mean, Legal and General America.
It's a mouthful,
It
isn't it?
is a mouthful. I'm the first one to start using this phrase, and I'm going to start using it LGA.
That's
I'm just
fine.
going to end it that way because I
That's
think
right.
it's easier.
That's right.
I think a new moniker in the market. Now, a lot of people want to know why the name change, and I think the reason is because they don't know who your parent is.
Exactly.
So talk a little bit about name change,
Yes.
identification branding,
Yes.
and talk about huge parent
Yes.
out of the UK.
Okay, well, that was, the huge parent is really the reason for the name change. Most people knew Banner Life as a high-quality, mid-sized term writer in suburban DC. And we're really much more than that. We're part of a family that is huge. Legal and General Group, PLC, is 175 years old. It was formed in a coffee shop in the UK 175 years ago, celebrated its anniversary on September 19th. It is the 9th largest insurance company in the world, in the world.
Wow.
Based on admitted assets, according to a report from AM Best. So we actually are part of a huge family. And in this day and age, a lot of folks, a lot of buyers kind of have, size and mass and significance as a screen when they're deciding what company they should buy from. So we decided that we should really transition our brand from Banner Life, William Penn Life of New York, to Legal and General America, so that people would identify us with that larger, strong, very strong, highly rated parent.
When I think of the normal producer out there and our producers, we always have to deal with paperwork. Our business is intense in documentation.
Yes.
But will the word Banner go away? Will the word William Penn, of New York, will that go away?
It won't go away. Those are still the underwriting companies, the companies that will issue the contract and with whom you have the contract will be Banner or William Penn Life Insurance Company of New York. But they're all part of a holding company that's named Legal and General America, and you will see that umbrella logo everywhere. Even when it comes to policy delivery documents and that sort of thing.
Will anything change, like on some of the big spreadsheets of the United States?
Yeah.
Vital Term,
Yeah.
Vital UL,
Yeah.
CompuLife.
Yeah.
Will any of that change? Will it stay Banner, or will it change to LGA?
Both. To answer your question, it is quite a job to really kind of consider all the issues that come up when you want to change your branding. And one of the things that we did was to develop a microsite with a lot of tools specifically for some of the spreadsheet companies, some of the vendors, or some of our own general agents who use logos on their website. And so we actually have downloadable logos that actually have the Legal and General America logo juxtaposed with Banner Life, William Penn Life of New York in block letters.
And this umbrella is the new brand or logo itself.
Yes.
Now, it's a multicolor. It looks, actually, Frank, it looks similar to the tie you're wearing.
How about that?
I just noticed. I noticed the coordination here. So really, these colors,
Yes.
right, are kind of reflective. And the umbrella. I mean,
Yes.
Frank, I hope you know this, that the umbrella has been used before.
Yes.
So why was this a distinct feature?
It's really just the parent company's logo has been for
It's been theirs forever.
for years.
Did they have it before
decades.
this other company I'm thinking of?
That's a
That's a good
topic
question.
of
Okay.
discussion, but it's been there forever, and we really have just adopted their logo typeface. It gets down to what sort of typeface you use and that sort of thing. And so.
Well, so now the branding of using this huge parent, Legal and General, who's been, in Europe, everybody knows these
Yes.
guys. So we're introducing them to the United States
Yes.
through their subsidiaries, Banner and William Penn of New York.
Correct.
And now our U.S. subsidiary covering or umbrella name is Legal and General America.
Correct.
Okay, so now we're going to start seeing Banner, LGA
Right.
on our spreadsheeting. We're going to see this. Now, but the paperwork will stay the same.
Yep.
Licensing, contracting,
Yep.
applications, everything's ditto on that.
Right.
But what we're moving to is on our spreadsheets and so forth, new identification.
Correct.
Now I noticed that one of our spreadsheets that we really enjoy, of course, every CompuServe is a national spreadsheet.
Yes.
They use logos in their embedded spreadsheets,
Yes.
which a lot of clients like to see.
Of course.
I'm sure playing off that new look, and now it's not new to the UK Legal
Not
in
at
General,
all. Not
but
at
to
all.
us it is.
Yes.
So they're going to start seeing this new umbrella look
Right.
on CompuLife is one example.
Yep.
And our own spreadsheets, which we sometimes pull logos off to kind of tidy up and make our
Yeah.
grids look really good.
Yeah.
So when I'm thinking about this, But in the first part, we were talking about the reserves because the company now is back. Because everybody asks, well, if you have such great secondary guarantees, and on top of that, you endow,
Right.
you got to have reserves for that.
That's right.
You got to cover your shadow accounts.
That's right.
So now all of a sudden, my parent company, right,
Yep.
is showing the huge billions big. Actually, you know, there's serious numbers here.
Yeah.
I mean, when I think about in America, I think only maybe Met or Pru is larger than you. I mean, it's really, you guys are up there.
In America, there are only 3 companies that are bigger than Legal in General.
Right.
Yes.
Yeah, so we're talking. I think people like, especially in these days of economic, turbulence.
Right.
They like the idea that I have a big parent company behind my subsidiary, and not only that, one that's been around for almost
2 centuries.
2 centuries.
Yeah.
So I mean, that's big.
Yeah.
Now, as we're kind of closing out our interview, I want to talk a little bit about going forward. What do you think the vision of LGA in America? Because I want to start saying LGA.
Perfect.
LGA in America.
Yes.
What are we going to look from LGA? Where are you guys going to play? What do you
Yes.
see the future in the next, let's say, decade? Because my boss says I have to work at least for another 10 years.
Yeah, well, we are on another soapbox about the underinsured state of America. We sell very, very low-cost guaranteed protection, something that almost any family can afford more of, and most families need more of. And so I think you'll see a lot of what we do trying to really find ways through our independent agency force to reach families that need more insurance and convince them that it's a wise allocation of some of their funds. I think you'll see us continue to offer lanyards, a little bit extra in our product designs. Guaranteed cash values that endow is one. We have MetaGuide Second Opinion, a third party.
I know we don't have time for that a lot, but look, give me in a nutshell, what is that?
It's a third party second opinion service offered to all insureds under our umbrella, if you will, that really allows somebody who's stricken with a malady that's life-threatening to get a professional second opinion from the teaching hospital in the world that is most expert at your malady.
And that comes with the application,
Free.
just coming in for the application.
Yes.
For that is a huge play, and
Yeah.
hopefully we'll take care of making sure we get all the information on
Yeah.
that, the links and everything else. That could play big in underwriting
Sure.
cases where we're looking at second opinion and quality carrier. I mean,
Yeah.
I've never heard of that.
Yeah.
I've been in this a long time. When did you introduce this?
We introduced it in June of 2010.
So this is relatively new.
It's relatively new. We're the only life insurance company that offers it. There's some health insurance companies that offer it. And it is just one of the things that makes us distinct.
And that is, one more time, just so our producers hear the whole phrase.
MetaGuide Medical Second Opinion.
Wow, I love that. Well, we'll definitely get on that and make sure our sites see all that.
Good.
That's another distinguishing mark, and I love that. A second opinion at the highest level, and you're doing it for the client
That's right.
for free.
That's right.
That's a huge giveaway.
Yeah.